Welcome to Shared Lunch, brought to you by BusinessDesk. I'm Frances Cook, Investments Editor at BusinessDesk. And today we are joined by a hotly requested interviewee, Don Braid, CEO at Mainfreight. Thank you very much for joining us, Don.
No problem.
Now, before we get going, we do have to quickly tell you some important stuff. Roll disclaimer. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. All right, we're back. Don, I got to say, you are representing, obviously, Mainfreight and a very popular stock on Sharesies. But before we get into that, I want to talk a bit about your history, because as I was looking you up, you have a very unusual, I would say, job history at this point in time. Everyone talks these days about job hopping and jumping around. Meanwhile, and correct me if I've got any of these numbers wrong, 40 years in freight, 26 years at Mainfreight, is that right?
Oh, it's a bit longer than that, I think, but it doesn't feel like it. We're still having a heap of fun. And it's been a wonderful journey. So I think I've been very lucky with what I've done and what we're experiencing. But more importantly, surrounded by a bunch of really great people. So when you're working with people that you respect and look up to, then it makes the job very easy.
What keeps you hooked on freight? What's interesting about the industry?
Well, where did you buy your bottle of wine? Where did you buy your food last night? All of those things are integral to what freight is. And we're in a key component of the supply chain. And it's an interesting business. There's no one customer the same. No one day is the same. There's all sorts of challenges. It's a really motivating industry to be in. But even more importantly, though, it's, as I said earlier, it's the people you work with and the family of Mainfreight make it more enjoyable. So we've had a small degree of success as we've got ourselves around the world. And that's even more interesting. I mean, to have started in the freight industry in a little place called Timaru in the South Island, and to be travelling around the world establishing a freight business is a bit surreal, to be honest with you. But such is the energy, enthusiasm of Mainfreight. And so why wouldn't you hang in and enjoy it? You know, in all honesty, the way that we approach people that want to work for Mainfreight is that we're looking for young graduates and intelligent, passionate people who want a career, don't want a job, don't want to actually move every 1 or 2 years, and actually are looking for a stable career that might well take them around the world. So Mainfreight can provide that. I guess the best lesson is those that have been with us for a long, long time, and seeing them as mentors or as people to look up to guide them in their career keeps us all interested and energised.
So as someone who's quite the veteran at this stage, is there anything that people get wrong about the industry?
Oh, I think a lot of people think it's down and dirty trucking, and in fact it's a very sophisticated industry. It has a lot of IT involvement. It requires a great degree of quality, a great degree of passion and energy and customer relationships. So therefore, for those that get involved, it can be complicated at times and therefore stimulating to the mind.
Let's jump into your half-year results, because they were just released recently and better than expected, I think. But I think this is fair, that it was better than expected because there was quite a pessimistic outlook from some quarters. And you've said yourself, it's been a tough 6 months. Top-line numbers, 21.6% decline in half-year revenue to 2.36 billion, which is still fairly impressive. 42% fall in net profit to 124 million. So, look, still profitable, let's be clear, but lower than where it was before. Talk to me about what's behind the numbers.
Still profitable. That's a concerning comment. Look, we're a very profitable business. We're going okay. Let's remember what we've been through, which is the greatest supply chain congestion period of any of our careers. And for as long as you're thinking that I'm in the business, I've never experienced the congestion and freight volume that we saw during 22 and 23, which came as a consequence of, I think, the pandemic, government stimulus, people being caught up at home, wanting to buy product to entertain themselves, and therefore the supply chains got overloaded. So therefore we went through an extremely busy time and an extremely profitable, high revenue period. Frankly, we wouldn't want to go through that again. Our people were placed under enormous pressure, servicing the needs of our customers, looking to do whatever they can to satisfy those customers. The stimulus that was in the retail environment saw us move record volumes of freight, both in air and ocean, in our warehouses and across our domestic docks. Now we're back to what we would call some form of normalised environment where the destocking has gone on. I think people are probably spending whatever spare cash they have on services, travel, restaurants, dining out, rather than another barbecue or another bike or the likes. Our customer verticals are food, beverage, DIY, perishables, pharmaceuticals. People still have to eat and drink, so we're somewhat resilient as we move through a lower economic cycle. But we're more positive about what we're doing. The coming off that peak, if we look back to 21, which was before the peak of the supply chain congestion, we're a lot bigger than what we were in 21 in this half-year result. So through those congested years, we've grown a bigger and a better business all around the world. We've just finished opening in India, so 27 countries, 332 branches and 10,516 people. It's still a relatively large business, and we're only just getting started, in terms of what's available to us in the markets that we're in. And I think that's an important point. We've found ourselves in some of the biggest logistics markets in the world, and we're a small customer in terms of the shipping lines and the airlines. Yet, that'll transpose into something like 5 or 6 billion of revenue per annum. Yet our biggest competitors are sort of 30, 40 and 50 billion. So there's plenty still to do.
As you say, just getting into India recently, and you have been pushing that worldwide expansion. Do you have more countries on your wish list, more that you're lining up?
Yeah, of course. We're an ambitious bunch of so-and-sos, and we see the opportunity for us to continue to expand geographically. I think we're intensifying the network, and those are the words that we use, both within countries. So we're opening more branches in more regional areas, like we've done here in New Zealand. We're taking exactly that same recipe to Australia, to Europe, and to the United States, to Southeast Asia, China. But there is a discipline about opening in other countries. It's not just a wish list and we jump on a plane willy-nilly. We know where we want to open and why we want to open there. And there will be some regions that is just not possible for us to be there. We do like controlling our destiny, and in some countries around the world, we don't have the ability to own it 100%. So therefore, we can't control the decision-making in the direction of the business when perhaps a local government or a local partner needs to own 51%. So those are off the radar. But there's still plenty of countries left available for us. And as we continue to grow the network and find customers in those countries, then we'll choose the right time and likely to open. I think it's important to realise that we have a long-term horizon. We think about being around for 100 years. Maybe that's got a bit to be with me being around for 40 plus years. But it is, everything that we do today is about being around for another 100 years. So let's make long-term decisions, not short-term decisions. We don't want to go and open in a country because it feels nice or it looks good. For us, once we're there, we've got to establish the business as part of the Mainfreight network and grow it accordingly. And so therefore, we'll take our time and we'll get to some of those harder, more interesting countries as the business develops.
Yeah, what really strikes me there is there's a balance, right, between solidifying where you have got a toehold, places that you've gone into, versus expanding into new regions. What is that balance like for you, and how much work do you have to put into solidifying your footprint once you go into a new market?
Yeah, it's really important. If you take the history of the business and you go back to the days of when Bruce and the team started the business, they felt that they could only open one branch a year, and that branch needed to be profitable before they could afford to actually open the next branch. Now that same discipline applies to how we run the business today, that whilst we can find ourselves in another region, but we need to find profitability that allows us with the capital to continue to grow the business. So it's really important. It's not that long ago that we got to Australia, and there are plenty of people that said we would never make it. We always believed that we would, and doggedly we dug away and found profitability and found growth. And those valuable lessons that we learnt as we got outside of New Zealand, particularly with Australia, it's a very different market. A lot of people think because we all go to the beach and wear jandals and enjoy a meat pie and maybe a cold beer, that we do business the same way. Well, we don't. So therefore we had to learn the art of doing business in our sector in a different country, different culture, different ways of doing things. Australia taught us a lot. And we positioned ourselves there and got ourselves profitable before we took the next leap. But actually, the reality is, if you go back over history, we acquired some businesses as beachheads. So Australia, we bought a pretty rundown business, and today we've got a fabulous business growing there, which will ultimately be bigger than New Zealand. Now we call New Zealand and Australia our profit sanctuary. We've solidified, to use your words, our position in Australia and New Zealand. Then we bought our Asian business, our agents. We progressively bought the shareholding off them. Same for America. We bought a large business there, and then we bought a business in Europe. Now those are the beachheads. And from there, we've grown organically. So the ability of the business to get itself settled and then use our culture, our attitude to quality, to high service ethics, and get a reputation with the customers has given us that ability to grow organically within each of the regions.
When you're looking at those new markets, as you say, very different countries, very different ways of doing business. Are there any sort of shared criteria, or are there specific things that you are looking for them to fulfill when you're saying, okay, this market next, that's what we're targeting next?
We're lucky that we're in the air and ocean business. And the air and ocean business allows us to open relatively cheaply from a capital investment point of view in each country. We can establish a team of people. We might move people from other parts of our business to a particular location. And then because our network is already trading with some of those customers around the rest of the world, by opening in that particular country, we've got that chance to attract the customer locally. And then once we work through the air and ocean service level, we might think about warehousing and we might think about transport. So the entry is relatively easy. It's still a tough ask, but once we get established with air and ocean trade, then trading across the world, we can then think about offering warehousing services and domestic transport services.
Mm-hmm. And it's interesting because obviously I'm sure that most of the people listening to this will be either in New Zealand or Australia. And obviously the economy a bit rough right now, but not just in these countries. It's rough globally. So it leaves very few safe harbours, even though you're doing that international expansion. How are you finding it in terms of, are there any safe harbours right now for business, or is it a case of a little bit gritting the teeth, getting through it?
Yeah, I've never used that term safe harbour. I guess the world of freight is not easy, and I don't think that we would ever take any market for granted. So therefore, we would never assume that it's a safe harbour for us. I suppose the closest I would get to that terminology is that we see New Zealand and Australia as our profit sanctuary. It's where we have a very intensive network, where we have good reputation, and we have a good number of customers that trust us. And every day we work hard to make sure we look after them. And that generates more business, not just in New Zealand and Australia. In fact, there's lots of examples where we've given customers a fantastic level of service in either New Zealand or Australia, and they've asked us, when they find us in America or find us in Europe or Asia for that matter, they're asking us to become involved in their supply chain networks in those countries. So is there a safe harbour anywhere at the moment? No. Frankly, I think any business that thinks they have a safe harbour has a degree of arrogance, frankly. Customers are choosy. Customers are demanding better levels of service. So therefore, we've got to stay on our game. And we would never take, even New Zealand and Australia, with what we do, we would never take that for granted.
And it's interesting, you mentioned earlier about, you might be getting contracts that are 5 or 6 billion, but you're going up against people that are worth 30 billion. And I think nobody in the business world is there to pull punches, but you can see different industries have different levels of aggression, shall we say. What's the freight world like, and what do your competitors make of you?
I don't really care what they think of us, to be honest, because I don't really care what they do. I mean, we focus on what we can control, and that's ourselves. And we do things a little differently than perhaps our competitors. There's no doubt that they see us as an emerging competitor, and the freight world can be competitive. It can be quite rough. But if you stick to the basics and stick to the disciplines of providing far better services than the next guy, then you've got a chance to look after a customer and make sure that you have a long-term relationship. So honestly, yeah, there's some big guys out there. Are they interested in us? Probably not. Let us go and do our little thing, and at some point in time we might be alongside them if we're lucky enough and do a good job. I mean, a great example of that is it's not just a world of competition at times. The freight people have got a lot of respect for each other, I think, and we are busy working our way through one of the biggest freight markets in the world, in America, in domestic transportation. I think our revenues are, I don't know, I can be exaggeration, have a little bit of exaggeration at times, but maybe $1 billion worth of revenue for our business in America. Well, our competitors are 20 and 30 billion. And one of them, whom we respect immensely, they do a fantastic job. All they do is domestic transportation. So, cheeky Kiwis, we put a hand up and said, can we come and see what you do and how you do it? And they said yes. So we asked again and took some of our people from around the world, and then we had our board of directors in America, as we normally do. We make the directors travel around the world to see the business, and we asked if we could have the directors on one of the docks, and the CEO of this particular business agreed, no problem at all. So we thought it was perhaps appropriate at the time to actually let them know that we intending to compete with them, if not already competing with them. And just quietly and gently he said, listen, mate, it'll take 20 years for you to compete with us. So, a dose of reality, a dose of the size of the market keeps our feet on the ground and has us working hard to try and compete with them at some point in time.
I love that. That's a very confident competitor you've got there.
Yeah, well, they are.
Are there areas of the business that maybe get neglected that you target in order to compete? Or is it a case of, as you say, that service, the looking after the customers, how do you get in there and compete with these big dogs? What do you bring to the table that's different?
Our people and our culture, everything, the disciplines that we have within the business. But we are a decentralized business. So, when I don't take for granted when I talk about, 10,516 people and 332 branches, each one of those branches has its own P&L. Each branch manager, he or she, is in control of their P&L, their people. So it's very, very decentralized. We would like to see the business run from the bottom up, not the top down. Trying to get rid of all that hierarchical corporate bullshit that exists in a lot of businesses and get those decisions made as close to the customer as possible. And those that are meeting the customers have that ability to make those decisions. So therefore, if you're sitting in front of a customer and making a decision because the business is behind you to make those decisions, you have a great opportunity to convince that customer that you'll do that for them every day of the week with their freight. And I think that face-to-face, is it a Kiwiism? Is it what we've learned here in New Zealand? I'm not so sure. I think that around the world, people want to do business with people face-to-face. They want to shake hands. They want to know who they're doing business with. They want to look them straight in the eye and ask them if they're going to do a good job for them. And when our people have that ability to say yes or no, for that matter, and make their decision in front of the customer, I think there's a degree of trust and a degree of difference. Another little story perhaps to illustrate that, we were lucky enough to get to one of the largest shipping companies in the world, and we got to one of the top floors of the building in a interesting city in France, southern France, and we met the key decision maker in the business. And he pushed a telephone book size contract across the table and asked us to sign it within, 10 minutes after pleasantries of meeting them. And I pushed it back and said, well, we won't be signing that. He was somewhat shocked, and we said, look, what we should be able to do is shake each other's hands because we trust each other. And if we can put what we're trying to do on one piece of paper, we'll sign it. As long as we trust you and you trust us and we deliver what we say we're going to deliver. And the response from him is that you weren't like the others. And since that meeting, we've done a lot of business together. And I think it proves the point, no matter whether it's the largest shipping company in the world or a nice medium-sized customer who wants to do business with a global business like ourselves, this face-to-face doing business together and trusting each other is a refreshing way to get on and make things work in this world.
I want to come back to something you mentioned earlier when we were talking about those peaks of profitability that you had, and now coming back to, as you say, maybe a bit more of normal. Is that how you see it going forward? Are you expecting to maintain more along the lines of the numbers we've just seen? Would we be maybe seeing that again in the full year results or this time next year? What are you expecting from the sort of short to medium term?
You're starting to sound like an analyst who's only got 6 months profile in front of them. And, rightly so, I guess. They've got to provide that information to the market and to their investors. But we're looking, and let's remind you, we're looking at growing this business for another 100 years. So we're taking a long-term view. Sure, we're not going to have the same result at the end of this financial year that we had in the previous financial year, which was our biggest ever. However, we're coming back to normal trading conditions. And our view, and we're feeling positive enough, is that this next 6 months will be a bit better than the previous 6 months. And if you go back over our history, we've gently growing the business year on year on year. And, I could be criticised to say that 10% or 12% is a gentle increase. But, in the world of a $4 or $5 or $6 billion business, 10% is not too bad. But it brings law and order, I suppose, or it brings a sense of order back to the supply chain. And that's what we mean about normalisation, is that our people have no longer got congested warehouses. We've no longer got overflow warehouses. We're back to normal stocking levels for our customers. We're back to normal ordering cycles on behalf of the supply chain. And that's allowing us to be as best as we can in terms of our quality services.
Well, it's interesting that you mentioned Analysts there, because I was having a little look around at what other people had made of your recent result. And yeah, a lot of favourable commentary from Analysts, and the general sort of tone, it differs in the details, obviously. The general sort of tone was that maybe you might have a rough next 6 months, but they see you doing well in the more medium to long term. Do you agree with that analysis?
Well, it's what we always try to do. And, as much as I'm sitting here saying we're interested in the long-term view, let's not forget the discipline in the business is that we measure our P&L weekly. So on a Monday night, Tuesday morning, we know what we've made or lost in each one of those 332 branches. But more importantly, the branch manager understands what he or she has done for the week prior and allows us to be very proactive about improving the business. So we're looking to improve all the time. And I think that's good. If you feel the analyst community here in New Zealand are being a bit more upbeat and having a long-term view, that's what we're asking of our shareholders to think about. If you're thinking about investing in Mainfreight, it's a long-term view, not a short-term view. And, frankly, I'm not sure what Sharesies' advice is to their clients or customers, but I'm sure they're talking to them about investing for the long term. And short-term money in the stock market is a quick road to problems. And for us, all of us who are major shareholders or significant shareholders in the business bought a long time ago. Let's not forget we listed at 96 cents a share in 1996, and I think today, $64 odd, and we've hit a high of something around the 90 odd mark. Again, it's a reaction to the strength that we've built into the business, and I think our long-term view. And if we take a long-term view rather than taking short-term cuts, then we're creating a business for the future that people are comfortable to invest in.
Well, yes, on that, with the results came the announcement of the interim dividend of 85 cents. And of course, as we've talked a lot in this interview already about those plans for expanding the network, investing in your people, as you say, it's not just trucks. There's a lot of IT goes into it. There's actually a lot of technology behind it. So as you're looking at that expansion and increasing the business, was there any part of you that after the profits fell sort of considered holding back some of that dividend?
Oh, I think it was discussed around the board table, but not for too long. We felt that mostly we've stayed with we've never decreased our dividend just as an aside. And we've always said 40% of net profit. Now, there are times where we've increased on that, but the reality is, if you think about that, we've never decreased the dividend, and we've always been around a ratio of 40% of the net profit in terms of dividend. That must say that we continue to expand our profitability year on year. However, in this instance, we've got a very strong balance sheet. We've got quite an aggressive CapEx program in front of us, building new warehouses, new cross-docks across the network around the world. Some of those projects that we've forecasted have fallen out of the time frame for the next 2 years, only because of building delays and or the opportunity to buy land, as in the Netherlands, where we are buying land off the local council and they've delayed that purchase. So therefore that's reduced our CapEx program for the next couple of years. Some might say prudently, not understanding how the economic environment might turn out over the next couple of years. But at the same time, it gave us the confidence that we should retain the dividend level that we've got currently, that we paid out this time last year. It rises the dividend as a percentage of net profit to 67%. 30%. But we feel confident that'll pull itself back to 40% as we grow the profitability. And of course, we keep investing that important capital in expanding the network. So therefore, there's a confidence around the board table that we are still on this growth trajectory. You know, why don't we talk about that in terms of where we see the confidence of the business? We've got ourselves into some quite large economies. Our criticism is that there's probably a lot of other New Zealand companies that could do the same. Yet they seem to get somewhat, I don't know, stage fright or something about taking that step outside of New Zealand. Yet when we get there, we see so many opportunities and so much potential out of those large economies. I mean, let's not forget we're growing a global business here from a population of 5 million people. And we're competing with companies that have come out of a population of 300 or 400 million. And they've got a pretty good start on us. Yet we're still finding opportunity. Now, I think there's plenty of other companies in New Zealand that are good enough to do the same thing. The investment community, the analysts, the general public have got to celebrate and urge those companies to get them outside of New Zealand, to grow their businesses in larger economies, larger GDP producing economies that will be good for their shareholders. You know, no one recognises us as a good exporter because we actually bring all those funds from those businesses around the world back to New Zealand. That's what's funding that dividend. And, you know, whilst we do have shareholders outside of New Zealand and, in fact, an increasing shareholding base outside of New Zealand, we still have a great bunch of very loyal shareholders, a lot of them in the Sharesies program as well, that are New Zealanders. And that dividend we're paying out comes from our profitability offshore. How exciting is that? And, you know, that's helping the New Zealand economy grow. We need more New Zealand companies to do the same thing.
All right then. Well, if you were talking to some of those, I'm sure you've got examples in mind. If you were talking to them, is there maybe a main lesson that you've learned along this expansion journey that you think other New Zealand companies could take on board?
The lesson is it's not easy, but give it a go. Take a step and gradually improve your profile. You know, do the small jump into Australia if that's where you see yourself, or actually have a crack at an American market or an Asian market. Actually, the way we do business in New Zealand is quite well liked around the world. And I think there's many good companies in New Zealand that have the ability to expand. They've just got to have the gumption and the motivation to actually get themselves offshore and see what they can do in those markets.
What about, because this is, of course, a chance for you to be talking directly to the retail investors. These are people who are often DIYing it, getting out there, picking their own stocks and educating themselves without an analyst or advisor on board. So what would be a main takeaway you would like them to take from this conversation we're having today?
To invest long term, to find good quality businesses, to look at businesses for all the right reasons and not for the latest whim. We might not be the sexiest and best product on the market at the moment, like the widget or a gadget or whatever is coming out of businesses, but actually look to the people that work for it. Do they have a good culture? Have they got a long-term horizon? Are you investing for the long term? Therefore, align yourselves with a business that thinks exactly the same way.
Love that. Thank you so much for coming on, Don. Absolute pleasure talking to you. And if you want to catch more Shared Lunch episodes, don't forget you can find us everywhere you find podcasts, including, of course, YouTube, but also Apple, Spotify, iHeartRadio, all the rest of it. Enjoy the rest of your week. Do stay safe.